In this presentation, I'm going to outline some issues in Indonesia economies. Here are some questions to get some insights of Indonesia's economy. The first question is, what are the challenges of Indonesian economy? The second is, what is Indonesia 4.0? The third question is the importance of Indonesian small and medium enterprises to the economy and what constraints are faced. Number 4 is the weakening currency is an economic problem that is often faced by Indonesia. What was the cause of Indonesia weakening currency back in 2018 and 2019, the last event, and how to cope with that situation? The first question, what are the challenges in Indonesian economies? The first challenge is its low tax revenue. Tax revenue in Indonesia is very poor and ranked amongst one of the lowest percentage globally at 12% of GDP. To add some perspective, in USA, the tax revenue is around 26% of its GDP. In UK, it's 39%, in Germany 40%, in Japan 28%, in China 22%. It is no surprise considering we only have approximately 27 million registered taxpayers when there should be around 120 million people if everyone eligible complies to the tax law. Many citizens in Indonesia, they have a completely lax attitude towards tax evasion as they probably wouldn't get caught anyway. Indonesia's lack of tax authority enforcement leads to the government having little money for serious development. The second challenge is lack of infrastructure, the most important of which is port capacity, roads and railway networks. Indonesia's port capacity is quite poor. The largest port in Indonesia, located in Jakarta, which has a capacity of 5 million TEUs. Other ports in less developed regions are way poorer in its capacity. To add some perspective, Port of Singapore has a capacity of 32 million TEUs. It means there is very little incentive for the private sectors to make investment into shipping vessels as there is just not enough capacity to sustain it. This problem leads to Indonesians having to spend much more if they want to export goods to foreign markets as there is very little supply of container transportation. It is much more lucrative to base operations in Singapore, which has ready-made cheap transport for exports. As a result, Singapore has an export level of around 23 billion US dollar, which dwarfs Indonesia at 12 billion US dollar, despite having a small fraction of Indonesia's population. The third challenge, among others, is roads and railway networks. The island of Java in Indonesia is fairly developed in terms of roads and railway networks, although it is still behind other developing nations in Southeast Asia, for example, Thailand and Malaysia. In other regions in Indonesia, the developments are clearly very poor. Many regions in Indonesia can barely be accessed by heavy vehicles. This results in a severe disparity in prices between the regions. Therefore, the private sectors don't find it profitable to do business in areas that is inaccessible. There are many regions in Indonesia where basic commodities such as medicine are severely overpriced. This lack of access to goods and service hinders the developments of many regions, those affecting the citizen wealth in the area that is inaccessible. The other challenge is the lack of financial literacy among the Indonesian population. The typical wealthy Indonesian would choose to invest in property owning more than one houses and apartments or lands. This behavior drives up prices and result in an overpriced property market, especially in the more urban regions. Property prices in Jakarta, let alone Bali right now, is at unrealistic level relative towards the average Indonesian income. With the availability of advanced financial institutions, Indonesian could have invested in sectors that would have been more beneficial towards the overall growth of Indonesia economy. There are also other challenges, among others. There are competition from its peers, for example, from countries like Malaysia, Thailand, and Vietnam, which they invest more in human resources in the education system, which producing a more qualified human resource that leads to a more higher productivity, and invest in technology that also leads to higher productivity and lowering production costs at the same time. Other challenges is middle income trap that we will discuss in our next presentation. The second question, what is Indonesia 4.0? Industry 4.0 is a term that refers to the fourth industrial revolution in manufacturing and industry. It includes major innovations in the digital technology, biology, and hardware automations. It aims to encourage added value and high technology industry to become a competitive player in the new global context. In order to turn Indonesia into a competitive nation, it will require the development and integration of connectivity, technology, information, and communication. This should lead to a more efficient economy as well as higher quality output in the industry sector. The next point is elements of Industry 4.0. Industry 4.0 is supported by five key technological advances. They are Internet of Things, artificial intelligence, human-machine interface, robot and sensor technology, and 3D printing. In the making Indonesia 4.0 roadmap, five sectors are named priority sectors. They are food and drinks, automotive, textile, electronics, and chemical. These five sectors are all key sectors in the world economy, and Indonesia should become among the leading global players in these sectors. These sectors are envisaged to boost the country's export in the future and cause a thriving role of the manufacturing sectors towards Indonesia gross domestic product or GDP. The roadmap is expected to boost the economy of Indonesia by between 1 to 2%. Hence, in the period 2008 to 2030, Indonesia's GDP growth rate should be at least 6 to 7% per year. Meanwhile, the manufacturing industry is targeted to contribute between 21 to 26% to Indonesia's GDP by 2030. Meanwhile, on the back of the thriving manufacturing industry and export performance, job creation through the roadmap is estimated at 7 to 19 million by 2030. If we talk about Industry Revolution, we started at Industry 1.0, where people were utilizing steam engine to replace manpower, and then moving to Industry 2.0, which is including the implementation of mass production and utilizing electricity in production. And then, as technology advances, people move to Industry 3.0, where there is automation in manufacturing activities, and finally Industry 4.0, where information and communication technology being fully utilized not only in production activities but also in the whole supply chain, thus creating new business model with digital basis to achieve higher efficiency and better product quality. Moving to the next question, the importance of small and medium enterprise for Indonesia economy. Small and medium enterprise play a vital role in the Indonesian economy, contributing close to 58% of GDP. And small medium enterprise employs more than 19% of workers, according to International Council for Small Business. Despite their vital role for Indonesian economy, small and medium enterprise, they also face some constraint. Among others, the constraint is limited access to finance. Kredit Usaha Rakyat or loan for SMA is government initiative to address barriers to SMA growth, such as limited access to finance, which is frequently cited as a problem for smaller firms that lack sufficient collateral for loans. This loan for SMA or Kredit Usaha Rakyat implemented 7% of interest annually. SMA also face a gap in terms of technology and training. Just over one-third of Indonesian SMEs are offline, while another 37% have only basic online capabilities. Offline SMA could boost revenue by up to 140 million rupiah or 10,700 US dollar per year by acquiring advanced internet capabilities. On a wider scale, this could increase Indonesia's GDP growth by as much as 2 percentage points per year. Given the strong correlation between online engagement and international competitiveness, developing stronger internet skills and increasing broadband among the SMA economy will likely be key to fostering regionally competitive entities. Increasing SME's knowledge in areas such as ASEAN product standardization and export-import procedures are also important agenda, so Indonesia could have a bigger economic share in correlation to the implementation of ASEAN Economic Community. While SMA play a vital role in the Indonesian economy, this is not reflected in terms of their participation in global production network as exporters. According to a report by the Asian Development Bank, just 6.3% of Indonesian firms were active in these networks, compared to 21% in Vietnam and 46% in Malaysia. Moving to the next issue, weakening currency is an economic problem that is often faced by Indonesia, as depicted by the figures that the fluctuation of Indonesian rupiah to US dollar has occurred over time, and it happened in 2018, the last event, and we will discuss the factors that causing the weakening of Indonesian rupiah and how to cope with that situation. What was the cause of Indonesia weakening currency in 2018 and 2019? Indonesian currency came under pressure following the surge in the Fed rate. The rupiah exchange rate fell further as foreign capital began to exit from the country's financial market. Global investors are relocating their portfolio investment from financial assets in emerging countries, including in Indonesia, to US dollar-dominated assets to take advantage of the rise in the US Treasury yields, which have been on the upward trend lately due to the rise in Fed rates. Foreigners own nearly 40% of the government bonds in Indonesia. Therefore, rupiah can be hit by outflows from the bond market. The cause of Indonesia's weakening currency is also Indonesia's high current account deficit. Indonesia is already importing too much, more than it exports. This means that demand for US dollar is higher than its supply. Indonesia imports much supporting material for the aggressive infrastructure project these recent years. Many of Indonesia export industry also relies on imported raw materials from abroad. Indonesia also imports large amount of refined petroleum because lack of infrastructure and technology to produce on its own. There are some mechanisms to cope with the weakening currency. The first is to increase interest rate to attract portfolio inflows from abroad. The second is doing intervention in bond market and foreign exchange market, where Bank of Indonesia has persistently sold dollars to put a floor under its currency. So the bottom line in here is to balance the supply and demand of Indonesian rupiah to avoid Indonesian rupiah value to fall further. The third mechanism is encourage hedging by lowering hedging cost. The next is mixing 20% biodiesel in petroleum in order to reduce the amount of refined petroleum imports. So the trade deficit could be reduced. And the next is to hold infrastructure project. So the import of infrastructure supplement materials could also be reduced. Next is to increase import tax and stop imports of luxury product. Once again, also to avoid and to reduce the amount of imports, so the trade deficit could be reduced. The next is to boost export of commodity, manufactured product, and tourism because a weakening currency is a momentum for export because the value or the price of local product will become more competitive in the period of weakening currency compared to competitor price. The next is monitoring and limiting currency exchange transactions to manage the supply and demand of rupiah. And the next is to make exporter convert 75% of their earnings into rupiah. This mechanism to ensure that there is a high demand of rupiah, so the value of rupiah could be increased.